Hello bulls, hello bears, welcome to my daily morning show, Stock Rumors, the best channel on the market because it will teach you how to become a professional investor, okay? Here we discuss the psychology, the mentality, the aggressiveness of the sharks, people who make money in the stock market consistently. Here, I don't tell you buy Tesla today because it's approaching $600. Why? Because in 5 years from now, that might not be the price, so it won't be of any good. I make videos that will last forever. Even when I pass away, if you happen to watch one of my videos, you will learn a lot. So I want you to grab a notebook, grab a pencil. If you don't have one at hand, pause this video, go look for a notebook, a piece of paper, anything, because you will learn valuable lessons here today. All right? Go ahead and do it. I will enjoy a sip of my precious liquid coffee. All right? So now that you subscribe to my channel and you grab a piece of paper, I want you to write down, okay? I want you to, just like me, write down, okay? Write down, I will lose a lot of money in the stock market. That's right. Write it down. I want to teach you an important, valuable lesson if you want to call yourself an investor. All right? You're going to lose money. It's unavoidable. It's part of the game, all right? It's nature to take money from you. You can make a lot of money and it can steal a lot of money from your pockets, all right? You can go from having a lot of money to being broke. That's right, broke. So you will lose money. I want you to, imprint that in your mind. My name is Andy. I always tell you the truth. I say it the way it is, all right? I don't try to sell you anything. If you know me, you know I'll tell you everything. Very transparent. You will lose money. I will tell you why. If you have some experience in the stock market, right, and you think that's not the case, let me tell you something. There are two columns, all right? Two groups of people, all right? Bulls and bears, all right? They're constantly at each other. There is a group of people trying to sell what they have, all right? So you're gonna see they're asking for money, right? They're asking for a price. That is what the ask price is, all right? If you're new to this, write down ask price. Ask price. What is ask price? Ask price is the person who already owns or wants to sell you. The person could even sell you something without owning it yet, but the person is agreeing to sell you, all right, a share, a contract. They're asking for a price. I can have this right here, right? Now this right here, I don't know how much it is right now. It could be $19.99, I don't know. But I could ask for it $2,000, all right? Now, there is a difference between me asking you $10,000 for this and you paying for it, all right? So that's the other side of the column, right? There's people bidding, just like you would do on eBay, right? You would do on eBay, you like something, it's for auction, you place your bid. Same thing with the stock market. Some people ask, I asked 10,000, and there's another group of people who are offering, all right, trying to get it for the lowest price possible, all right? So if you're taking notes, I want you to write down, I'm gonna lose money. Why? Reason number one, there is two groups of people. Group of people asking, they are asking money. That's the ask price. And there is a group of people trying to buy at the lowest price possible. That's called bid price. All right? Now, listen to this. This is what I have learned. I have experienced. I have talked to professional traders. I have tried different methods. I have tried to buy something, a share, a contract. Try to buy something that doesn't have too much of a spread. Write down what is spread. Spread is the difference between the price that the person is asking and the price that the person is bidding. In other words, if I ask $10,000 for this, right? But there is only one person offering $2. The spread is the difference between $10,000 and $2. So it's huge. It's huge. What does that mean? Well, that means that there is not a lot of people after this. It's an indicator. Otherwise, they would be bidding against each other, right? They will be bidding against each other to pay more and more and more. So one will say I pay 2, the other one will say I pay 3, the other one I pay 4, I pay 5, and the price will go up. All right. So if the difference is too, you consider it too much for the price, that means you're gonna lose even more money. Here we go. If the transaction goes through, there is one person in a desk in a remote city in Nebraska, right? And the person finds value in this. And the person says, you know what? I will pay the $10,000 because I think that this will be worth $20,000 in the future. If someone does that, right? Now the person buys it and pays the $10,000. What happens if the person tries to sell it right away? If the person tries to sell it right away, he has to now jump to the other side, right? There's the bulls, there's the bears, there's people who are selling, others are buying. Others are buying because they have the expectation that the price will go up, but they're only paying $2. In the transaction, you buy it for $10,000, but now at the time of sale, just by the matter of fact, by the time you press that button and you hit submit, the way it's calculated, the price is calculated in the middle. All right. So if the buyers are bidding $2 and the sellers are asking $10,000, the broker will show the price right at the middle. That doesn't mean that people are going to sell it, right, or buy it at the middle point. It just simply means that that's the average price between the bid and the ask, right? So sometimes you buy something and right away you see a drop in your money, bam, right away, and you say, what happened? What happened was that you bought at the ask price, but the bidders are all the way down. So what does that mean? They sold you the shares, whatever, at the market price, and the market price is usually calculated right in the middle, right? So right off the gate, you lost money. Technically, on paper, right? You lost money, but that's the way it works. That's the way it's calculated. Now, does that mean that you shouldn't play the game? No, that means that you need to learn those technicalities or rules. All right. Now, how do? You gotta find a logbook. All right. You gotta find an app that tells you at every moment what are people offering and what are people asking for. All right. on eBay, there is something called like what people bid is registered. All right, you see somebody at 1 p.m. offered $2, and then and it shows you, it breaks it down of why the price is that much. Right, so you gotta find if you're using Robinhood, just to give you an example. Again, this is free advertisement. I'm not promoting that one. You can use Webull, you can use Think, or whatever you want to use. All right. You gotta see what are people buying, what are people asking. When you're buying options, let's say, in again Robinhood, you can go and see, all right, what was the highest price anyone bid today, what's been the lowest today, what was the last transaction at, right? That's very important, because if you want to buy at 10,000 and you see that people offer $9,999, you say, well, there's people willing to pay at these levels up here, right? Again, not trying to confuse you. I'm trying to say, again, I'm gonna pause it, slow down, so that you can wrap your head around the fact that you're gonna lose money. The price is simply calculated, in the middle. There's people asking, I want $10,000 for this. There's people buying, I only pay you $2. Okay, the price is somewhere in between. Try to buy and invest in something that doesn't have too much of a difference between the ask and the bid price. How do you find out what are people buying, what are people selling? At least with Robinhood, you pay $5 a month. $5 a month, you get like a gold membership, and now with the press of the button, you see live the numbers moving on one side of the column and the other. And you have a little bit more access to data within the app. Again, I'm not promoting it. It's just, that's how it works. If you find another app that shows you at all times, right? With TD, Thinkorswim, you have it there for free. That's something you should consider. TradingView.com is another one that shows you a lot of data for free. It's like a trial version, but it doesn't expire. You can continue using it. You're gonna see like ads popping up. You should buy now, 30% off, all that nonsense. But you can use it. Yahoo Business, the app, shows you a lot of good data and all the news. It's another good one. CNBC, of course, you can download that one. They got live audio, so you don't really watch it, right? You will have to pay to watch it, but you can listen to it, right? So sometimes I'm listening to the current news in the business. It's free. You can download CNBC app, live audio, and you listen to what's going on. But you gotta understand that difference. Now, another reason, right? So spread, there's two columns, bidding and asking. I explained that. Buy so that there is not so much spread. So when it's time for you to buy, the price doesn't drop too much to the middle. It stays more or less in the price that you pay. Another reason why you will lose money. Listen to this. You cannot predict the exact bottom. If you're writing down, you're taking notes, please do. Again, if you look at the way I teach, I'm a little bit unorthodox about, I don't teach probably the best way. I'm not showing many charts or, support and resistance. And matter of fact, you want honesty? I record this with my smartphone, all right? Not the newest smartphone, by the way. I got right now here the Note 9. It's about 2-3 years old. From there, I upload straight to YouTube. You know, I don't need to pay $2,000 for a camera. I could, but my point is, if you have good content, you don't really need a lot of equipment. I'm telling you the way it is. So maybe you don't like my lighting, the editing, anything. I don't care. I'm giving you knowledge. All you gotta do is subscribe to my channel. Look how good I am. Subscribe to my channel. I tell you the current strategies. What I do. This is why I'm different than other people. No, I like to look at things. I'm not emotional. I'm more like you gotta give me reasons, all right? Reasons, and I look at things from different perspectives and angles. If you want to learn basics and you want to learn why you should buy Tesla today and NIO, then go to a different channel. If you want to learn strategy, discipline, mentality, mindset, how to be positive, how to really manifest the things that you want to, achieve, and you want knowledge, free content, then subscribe to my channel. That's it. You cannot predict. Reason number 2 why you will lose money: you cannot predict the exact bottom, even if you are 100% right. Let me tell you this: why you will lose money in the stock market. Let's say that you decide to buy 100 shares. I want to buy 100 shares at $10. At $10. 100 shares. This is the most simple example. That's why I always repeat, the stock market is really simple. It's a little boring, yes. Not everybody watches this stuff, okay? And I said it before. It's okay. Why would someone go through the process of learning this boring stuff? Well, because it gives you freedom. It's the ticket to freedom. You can hire yourself. That's it. You can hire yourself. You can you can trade from anywhere. You can trade from your bed. You don't even need to get out of bed in the morning. You don't need to commute. All you need is your creativity and internet connection. So, and nowadays it's free, so it's for me. Tell you, what else you want me to say? It is the best thing for capitalism, man. You got basically teenagers deciding the fate of the economy of the United States of America and for the world, for all I know. What else can I tell you? Okay, we have the power as a whole to crash entire companies or take them to the stratosphere. Matter of fact, let me tell you something. I don't know your age. I don't know the age group you're in. If you're watching this, I don't know your style. I don't know. If you happen to make beats, all right, and you want to cut some of my best, strategies, we're sharks, we make money. If you want to cut it, edit it, put it in the software. I know how to do all that stuff. Just that I don't have, honestly, the time to do it. I might do someday, but if you know how to do it, you want to send me that little clip, I will upload it. I will give you the credit. That's it. Just cut some of the things I say. I'm giving you, an idea here. Cut some of the things I say. Put it in a beat that you own. All right, you gotta own it. You can't steal someone else's work. Why would you do that? If you make the project yourself, if not, don't do it. If you do it, if it's free, send it. I'll upload it. I'll give you the credit. Matter of fact, I'll make the music video to it. Just send it to me. DM me. That's it. You want to charge me $19.99? I'll send you $19.99. I'm cool here, man. What can I say? I'm cool. I'm a little old, but I'm cool. At least I try to. Listen, give you the most simple example. 100 shares. I buy 100 shares, $10. I buy 100 is $1,000. All right, I got a little bit, right? 100 shares you buy, they're at $10. I invested my first $1,000, and I can tell you I'm gonna lose money. Why? Because this is more simple, right? Example: if it drops 1 cent, right? And again, I say I'm gonna buy at $10 because I think it's gonna go to $20. Even if I'm 100% right, the stock might drop to $9.99, $9.99, $9.99, and it's going down. You say I'm gonna buy at 10 because it's gonna go to 20, and it does like this. It drifts, okay, and at $9.99, between the time that you bought them at 10 and the price dropped to $9.99, you lost 1 cent per share. That's $1. Okay, simple, and I'm trying to simplify it, but imagine that's being right. It's gonna stop at 10, but if it drops 1 cent, you already lost $1. All right, so when you invest more than that, instead of 1,000, you invest 10,000. Then, all right, you already lost, $10, and so on. All right. So what I'm trying to tell you is that you won't be right 100% of the time. All right. If you are, then you're a machine, and click, select all the ones that have, an hourglass, all right, to know that you're not a robot. Because if you have some knowledge that I don't, all right, how can you be right 100% of the time? And even being right 100% of the time, the price might drop just one tiny little cent, and you will lose money. Something that I learned in business, all right, when I was in business training, I stuff that you don't realize, but if you take 1 cent, and you cut it, all right, in 100 pieces, that cent, you cut it in 100 pieces, and you take one of those tiny fractions. If you make 1 million transactions and you make that much profit, a tiny little fraction of 1 penny, but if you do it consistently and you make 1 million, 1 million, 1 million, 1 million, you're gonna make a lot of money. So when the fraction or the prices is small, you need to buy in big bulks. And it's the same as if you were buying one expensive one. Let me explain. If I buy 1 million shares at a dollar, okay, I'm spending the whole $1 million. But if it goes up just a tiny bit, 1 cent, I'm gonna make some cash, all right, just because I have a big amount of shares. All right, so what does that mean? Is that people try to find out, okay, what is this share? What is the company that today is $1 and it's gonna be 1 million? And no, you don't need to find out what is the stock that's the next Tesla. You don't need that. I'm telling you, you don't need to know what is the stock that's gonna go up $100 next week for you to make money. You can do the exact same thing. You can take the exact same risk by ratio by buying a big bulk of more affordable shares. Okay, so I can take right now and buy let me give you an example with Amazon. Let's say $3,000. I can buy Amazon one share at $3,000. All right, and it might go up $100, in one day. So that day I made $100. Now, does that mean that I need to buy expensive shares like Amazon? No, I can go and buy something that's $3, right? $3, and if I buy 1,000 of them, then I'm spending the same $3,000. All right, now the price of the cheaper one might go up, not $1, but basically 10 cents. And I'm doing the exact same thing. All right, so you gotta find those micro profits, is what I'm trying to tell you. Micro profits, how do I make tiny little profits of a lot of volume? How do you achieve that? By finding a company that you like. I say this all the time, and I stand my ground. All right, I stand my ground. Um, I can make money without using charts, without using charts to trade it. Of course, I'm gonna look at a chart. You know, maybe you didn't understand me. Of course, I'm gonna look at a chart. Okay, because I want to know everything about that company. But I only need to do that once. The rest, if otherwise you're forgetting the charts, that means that you cannot remember pictures. All right, that means that your photographic memory is a little faulty. What can I say? You know why? I don't need to be identifying figures, right? Figures and trying to find symbols where there's not. Okay, this right here looks like an inverted hammer. This right here looks like a shooting star. And I think I can use all that time and all that mental energy to look for better things. And I call those things strategies. I kid you not. Today is November 27th. It is 11:45 in the morning. And how would you know? Because I will upload this like in an hour. All right. It is November 27th, 2020, 11:45 in the morning. Market is open. Market will close at 1. It will continue with after hours until 3 because of the holiday. It is trading times. I'm not trading. I'm spending my time here talking to you. Do I need to be looking at a chart right now to make money? No, because I know exactly what's happening. How? I know because I already went at it with a strategy and a plan. Even if it goes up, if it goes down, if it goes sideways, it stays the same. It goes loops, it shoots stars. I know how much I'm willing to lose. You're gonna lose money is the topic of today's daily morning show. My name is Andy. This is Stock Rumors. But the key, remember this. The key is not to predict the market. The key is to have a strategy for every situation. The key is to not predict what's going to happen, but have a tool for any problem that might arise. All right? So if I have a box full of tools, I can go at it, and if a pipe breaks, I know I have the tool to fix it. So how do you achieve that? My time is up. I know. Hopefully you have learned something. I will try to summarize everything and finish it right now. Okay? You will lose money. It's something that you gotta accept. Some people go to the stock market for the first time. They lose money. And they don't understand this because no one ever told them. I'm here telling you how it works so that you don't get panic, right? You don't panic and you don't quit and you continue doing it. You're gonna lose money. Accept that fact. A fact that not many people are willing to accept. You will lose money, a lot of it. In taxes, you will lose a lot of money. Accept it. But you can pay in taxes as much money as other people make in a year. If you pay taxes, that means that you're good. You're making money. You're making green. That's something good. Many people avoid trading stocks just for the fact that they don't want to pay taxes. Yo. What's going on with you? What's wrong with you? All right? You pay your share. You pay your fair price. You're gonna lose money in taxes, in spread, and that's talking about this today that is commission free. But should I still play the game? Of course. Of course. Now, you learn how a company moves. How a company moves. You learn how a company moves. All right? Now, the only thing you can control, the only thing you can absolutely control is yourself. Your discipline. What you cannot control is the market. So what is it that I gotta tweak? It's my mind. It's my brain. I gotta tweak my approach, my emotions, tweak it, learn. So if you're watching these videos, the videos I post, you don't gotta go 100% by the things I say. This is the things that work for me. But you gotta have the tools I'm giving you. At least it will open your mind to new possibilities. All right? A new vision, a new angle. Okay? That's what I do. That's what I represent. That's what I'm trying to teach you. That's why I say the things I do. From a psychological perspective. Have a plan, because the same example, I buy 100 shares at $10 per share. That's $1,000. I know I will lose money. The question is how much I'm willing to lose. I'm gonna buy them at 10. If it drops to $9.99, it's okay. I'm prepared for it. I know I'm gonna lose that dollar because I don't know the future. I lost $1. All right. Now I say I will sell the shares. I will put a stop loss. Something else you gotta write down. Stop loss. What is a stop loss? And I will tell you. A stop loss is the pre-amount you determined that you're willing to lose. I say, I will buy them at 10, but if they drop to $9.70, I can't take it anymore. I will lose it. I will sell it, my bad. All right, they're at $10. I'm willing to lose only 30 cents per share. All right, 30 cents per share. That's all I'm willing to lose. So before I place the trade, I want you to determine how much are you willing to lose. But don't panic if it drops something in between, because it is part of the business. But when people don't know, they go at it. They just want to buy 10 shares because so-and-so told them so. They lose $3. They panic. They never do it again. This crap doesn't work. No. Andy's going to tell you you're going to lose money. Does that mean you shouldn't continue? No. Go ahead and keep learning. This is part of the game. Thank you for watching. If you learned something new, let me know in the comments below. If you have questions, let me know in the comments below. If you think you have better strategies than I do, then you teach me something, okay? Thank you for watching. Bulls and Bears, I'll see you in the next one.